Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's our Monday edition of Trader Talk in today's market. I am your host, Kevin Horner. I'm joining you from a beautiful Denver, Colorado. Today, I am pleased to be joined by my friend, Mr. Ray Kimbrell. We do not get Ray too frequently, everybody, but we are ecstatic to have him. Hey, Ray, how you doing this morning?
Oh, man, I'm doing outstanding, and it is awesome to be here. I love coming in this morning with you and your viewers, and looking forward for a good hour.
Heck yeah, we're going to talk about what happened over the weekend a little bit. Not a whole lot in that way, but obviously there are some changes to the market. Really, Ray, last week was a shift in what we've been seeing from the market. I say finally because it had been 4 solid months of just continuous upside, it feels like. And finally, something different has occurred, and it gives us a chance to talk about something, doesn't it? I mean, it's been a little difficult to drum up discussion topics in the last few weeks here.
Yeah, I don't know if people like to hear about the market going down a little bit, but as you're saying, it was taking off like a rocket there. It seemed like for the last 4 months, and finally a little pullback, little reprieve, little relaxation in there, you might say. But so far this morning, as it opens up, looks like again a little bit of a pop back up in that.
Yeah, you know what? It's been bulls have been willing to step in quickly, as we've seen. Yeah. So let's see if today is going to be more of the same, just a one-day shift to what had been working. We're going to talk about a lot of those details here. So, hey, everybody, make sure you're following us on X. I'm available there, of course, Kevin Horner, CS. Today, we're also joined by Mike Fairborn here in the chat, and you can follow Mike on X at Mike Fairborn, CS. Ray and I are going to talk a little bit about the events schedule as well after I get through some disclosure detail. Just going to mention we've got some more events for y'all to attend live, and that's where you'll have an opportunity, of course, to see Ray most consistently as one of our lead event coordinators. So let's cover our details, everybody, so that we can work into the discussion for all of you. So please keep in mind that our conversation here is exclusively informational and educational. We do not make recommendations here. We do not make endorsements for a specific approach to trading the market. We will, however, discuss technical analysis with you this morning. We'll utilize technical analysis discussion topics and concepts traders may choose to employ when they are trading the market here. But remember, technical analysis is merely a piece of the decision-making puzzle. We do not encourage you to base decisions exclusively off what you get from the viewpoint of technical analysis. Additionally, we are going to look at options a little bit today. We want to remind you that options carry a higher level of risk, are not appropriate for all investors. And in order to trade options at Schwab, you do need to be approved on each individual account in which you would like to do so. Remember to be familiar with the characteristics and risks of standardized options. And Ray, as we mentioned here, we do have a number of key events coming up. I'm going to just highlight the agenda real quickly, everybody. You all know, those of you who are here frequently are familiar with our agenda. But Ray, tell us a little bit about what traders can expect if they do come and join us at one of these events. I know that we're looking out to September already. We've got a couple coming this month, and yet we're already at capacity. Things are filling up quickly these days, aren't they?
Yeah, they do. They fill up really quickly, and we're very, very fortunate for that. And it's one of those, as they say, one of those good problems to have. So in Dallas, that's going to be at the Gaylord Texan. If you're in Dallas, so that's only that's like 6 minutes from my house, which is kind of cool. And yeah, and that's going to be a big one. Looking forward to that, getting that set up and having everybody come out for that market drive. One-day event, both Chicago and Dallas. Big overview, you might say, of the market and how you can see what's going on, how to maybe approach some of the activities in the market. Great panel will be coming out, and it changes from time to time, but a great panel of experts will be there with us as well. Yours truly right there, the Kevin Horner, will be there, and I'll be there along with several of folks, and you get to see us in person. So come out and visit those 2 market drives in Orlando. What a great time to be in Orlando in October. Holy cow.
Yeah, no kidding.
Yeah, and that's going to be a 2-day event. And so you might want to come out there for that as well and see us there. 3 great events coming up. They're on the calendar. You can go in, you can sign up for the classes and come visit. Looking forward to seeing you.
I hope it goes without saying, everybody, we'd love to see you in one of these live events. We enjoy putting them on. I'm very lucky to get to support them. They're a ton of fun for us, and we love seeing your faces there, everybody. So if you have a chance, come visit us for one of these. Now, let's go ahead, Ray, and get started. Let's take a peek at what's going on here with the S&P. As I noted off the jump this morning, the big deal was the fact that we closed below the 20-day, the first time in the last 12, 13, 14 weeks, something like that. But the real question that is on all traders' mind now is, Ray, is this a one-day thing? Are we back up above it quickly? Are we okay? Ultimately, is what traders are wondering this morning. Your thoughts here?
Let me see. Let me break out the crystal ball, which look at that, it disappeared. It actually, still doesn't work very well at that ball. I haven't seen many things come in, but is it a one-day event? You never know, right? You never know. But right now, it's showing a little bit of positive momentum up there, bouncing off. As you said, it did break that 20-day. But, Kevin, the thing that's unique about a lot of these, I was looking at them this morning, is when it did break on Friday, they broke right down to that level of support. And when it did, it's showing that, who knows? Again, we don't know. Time will tell, as they say. But as it breaks off of that and it bounces, are we going to see some of the fears of what's the tariffs going to do? That's like a big question in everybody's mind. What's the tariffs going to do? And they had that same question way back when the President Trump announced them a while back, and they, the markets responded positively. I mean, and you whether you like it or not, and I don't want to get political with this, and this is not the place for that. You got to look what the market did. You got to look at what actually happened. You can't let your feelings, take advantage of anything. And kind of, I know we said this a lot of times in classes, trade what you see.
Yeah.
You know what I mean? And right now, what I'm seeing is, that bounce. And are the fears going to release? The market, the markets don't always go up continuously. You do get those pullbacks. So
it's kind of felt like the markets have gone up continuously for a while.
Yeah.
And, I try to speak to that because, of course, we as traders, we get a little complacent from time to time, especially when the same thing that has been working continues to work so consistently. Well, now the question becomes, can we get a close above the high of Friday? And because if Friday is the low day, and granted, this is not a shock, everybody, we get quick pullbacks. 64, the high on Friday was 64.27, and then our low, on Thursday, and then our low on Friday was 62.12. So we basically moved 200 points plus 215 points on a 2-day swing. And the question is that support at around 6,200 appropriate for us? It could be. We're going to wait and see. But right now, a lot of traders are wondering, can we get back up above 63.05? That's the price of the 20-day simple moving average, everybody. If we looked at this on a 5-minute bar, just to see, or in this case, 15, we can already learn that we've gapped through that R1 intra-period, and we are into the gap lower that we made from Thursday into Friday. And now becomes the question, can we trade into the gap and carry all that bullishness, Ray? And obviously, it's too early to say, but it gives us something to monitor for today, right?
It does. And there are, a lot of earnings coming up throughout the week. There's a few this morning hitting, and then a good amount post-market. But it's going to, time will tell, as they say again. And, right now, it's showing the signs of that strength. Will it hold? That's the thing to watch.
Yep. So that's what we're going to do. And obviously, for the intraday period, of course, not everybody is terribly concerned about what happens intraday, but it gives us, those of us traders who are wanting to pay attention on a short-term basis and look to fine-tune our entrance and exits. Well, the 15-minute bars, as we're looking at here, could be a little bit helpful today. Let's see if we can just maintain that gap zone for a bit, and maybe we can carry a little bullishness for the morning. But ultimately, it's all about, can we recapture that 63.05 by the close of business today. And we're going to do the similar view, everybody, at least from a bullish standpoint. What do bulls want to see? It's going to be on the NASDAQ 100, which is getting a nice little pop today after, again, that weakness we got on Friday. But everything remains the same here, Ray, except as we see I'm going to remove my oval here. We are right at the 20-day already well through the high from Friday. So a little bit of optimism in tech. Of course, again, too early to say, but we're learning enough right off the bat about bulls still wanting to buy the dip.
Yeah, a little stronger gap up than the SPX even, and so yeah, I think a little. This one shows, to me at least, a little bit stronger recovery or movement to the upside. Again, will it hold? I like the fact that it gapped up above the at least the open. It gapped up above the open of Friday, and it's staying there right now, which is pretty nice. So we'll see again if it can capture. I have a 10-day moving average on mine instead of the 20, and it's kind of approaching it, not so much, but you can see that yeah. And so that's again one of my trigger points. Will it hit that 10-day and bounce through that?
Yeah, I'm sure there's a lot of short-term traders, Ray, they're going to pay attention to that 10-day as well. Yeah. For a bit we were above it back here to June 23rd when we recaptured it here. Then we made that big gap up. That was kind of in the face of expectation, many traders would suggest. And then we kind of rode that 10-day for a bit. And then, again, the Friday action broke two of those very speedy levels, right? The 10-day and the 20-day. So now that we're working our way back into the 20, that's the thing to pay attention to, perhaps, right, Ray? I mean, you're looking at 23,045 on the 20-day, pretty close to where we are, and then 23,175. So that gives traders a way to take those levels and apply those into the intra-period viewpoint here as well.
Yeah, and that's one of the nice things about understanding how those two different moving averages can drive a decision, and using those. You're not just guessing anymore. You're having a definitive point you're looking for, and I think it's very helpful.
I think so, and this is one of the things traders will do. Everybody, you'll just kind of set these levels, duplicate your lines, activate them, and move them to the levels you're trying to pay attention to. Remember, 23,175 becomes the next level above. So you've got a couple of ways to do that can just give you the insight on your intra-period chart as it relates to the daily, some areas to pay close attention to here. So we'll see if this works for us, everybody, on the NASDAQ, but a good start at this point of the morning. I'm going to go ahead, Ray, and leave that 10-day on there for us. Let's move off of the NASDAQ into the small caps. The small caps had a really rough go last week here, Ray. They flew back to the 50-day. Now, again, I think a lot of traders would tell you, Ray, that they're encouraged by what they see from this particular move on Friday. That's a pretty healthy tail as we took out the 50-day on an intraday basis.
Yeah, and I had that same indicator on mine as well, and it's right on. And also, I got the 200-day moving average in there, and and right now the bounce this morning is just broke it, and it's hovering right above it right now on the 200-day moving average. If you put that in there real quick,
let's go ahead and put that in here. I've got it. 1020. Okay, I got to kick off my 10-day, but I'll go back.
That's all right.
Oh, I see. Okay, hang on. Where's my 200? Oh, there it is. We're in blue. It's very flat, Ray. Oh my goodness. Yeah. All right. So just real quickly, when you see two different time frames on top of each other in terms of those moving averages, what could that tell us?
Yeah. So if it breaks through that to the upside in this case, very, very bullish indicator. As a matter of fact, and where the price kind of opened up this morning, right in dead center, right in the middle of Friday's candle, that's also a little bit of a bullish indicator. That bullish Harami. And so, yeah, depending on where we go this morning and how the market reacts, if it stays above that 200-day, stays above, what is that, a 50?
Yep.
Your purple line stays above the 50. Then, good indication that it is maybe a little bit stronger than people may have thought. So
Sure.
or Friday's move down is not as strong as they thought. So yeah, a good indicator to keep an eye on. Again, there's no promises that it's going to continue moving that direction, but it's something that you should watch.
I think so too, at least in terms of price action.
Yeah.
We've got some viewers in here that may not agree. In fact, Time Structure is saying, I don't think all of this technical analysis has valuable meaning in investing. I'll mention, hey, you know what? In the long haul, you may very well be right. I mean, if we looked at something like the weekly chart here, there's certainly some levels that are appropriate to pay attention to within the small caps, the Russell 2000 here. But the trend analysis allows you to set levels of expectation. No one is suggesting here, Ray, that technical analysis is predictive in nature. And I'm pretty confident we've never stated that technical analysis tells you what's going to happen. But what technical analysis may do for you, Ray, is it can help you understand whether you want to be invested at a higher percentage or a lower percentage based on some of these trends. And when we're looking at the Russell 2000, merely as an example here, if we went and traded under the low we made on Friday in the small caps here, Ray, a lot of traders would then lighten up their small cap positions, believing that additional weakness could be coming to the table, right?
Exactly. And another thing to look at as far as technical indicators, and you have one that I use as well, is that RSI indicator down at the bottom, and you can see that what hit that dip and what's it doing right now? It's starting to move on the upside.
Yeah.
And so
it's shooking back up.
Yeah. And so it's, and as time goes and is based on price, it should see that gap, that tip up, or that movement up a little bit upwards, which is just gapped up. And so, yeah, again, see if that continues to hold and drives that decision making a little more easily, in my opinion, because you have something to look for again. You're not just guessing.
And that's just it. Again, we're just simply allowing price action to give us a little insight as to whether the trend that's been working is more likely to continue than to break down.
Right.
And that's what we're going to pay attention to as traders. The level of comfort with the existing trend will lead traders to be more willing to expose funds to the trade, or less willing. They will pull cash from the trades as that goes. But ultimately, that's what technical analysis does. It's a discussion of probabilities, and then traders will deploy money based on those probabilities. When they're feeling bullish and the trends have held, then they're more likely to expose more dollars to that trend. And that's why we're talking about what we are with regard to the pullback in the SPX, the pullback in the NASDAQ 100, Ray. If this is just a standard pullback, well, then the first thing that has to happen is we've got to close above the high trade from our pullback day. And right now, it looks like Friday was our pullback day in both the NASDAQ and the S&P. We are trading above those in the first, albeit only 20 minutes of the morning. So we're not assigning more validity to that just because of the move. It's really quick. It's 20 minutes. We've got 6 hours to go, Ray. There's no reason for us to get crazy in the first 20 minutes. We can pause, take a breather, step back, and just let the market do what it's going to do today. But our job is to have that thesis about what we think could go on, and then trade based on what the market is telling us.
I tell you, Kevin, you said something I think that's I hope a lot of people heard, and that is this: don't go crazy in the first 20 minutes. I've seen in many classes. And people come up to us in the class and we talk about the markets and what's going on. And people really get stressed out over the first 30 minutes, first hour of the market being open. And they think, oh, this is what's going to happen the whole day. And it doesn't. And then they're like, well, but it is. The first hour was awesome, and it's like, so folks, you do got to put those calming, go get the dog's calming treats and have one of them or something. I don't know. But you got to stay calm.
Everything in perspective, right, Ray? I think it's a good approach. Many traders refer to the first hour and the last hour of trading as kind of the most difficult to ascertain true trend. And it's true, we do get more volatility in that first hour and last hour, a bit more consistent and easier to manage perhaps in that block in between. But, again, every one of us traders, we're all different in how we go about things. But my encouragement for those of you who are new today is really to pay attention to a process. Have a process that works for you, and then stick to that process as best you can. What we are going to talk about periodically through our discussion here in Trader Talk is we talk about that plan itself and give you some ideas that traders incorporate, and then allow you to define those ideas for yourself. So, we just got done, Ray, talking about the close above the high of a low day. We call that a hold move. And for some traders, it's the first time that they're most comfortable re-entering or starting a new position. But Ray, some traders want more confirmation than that. And so it's important as traders to define confirmation so we know what is going to be the impetus for us to take action in the market.
Yeah, and it's a good thing to have that. And if you need more, if you're a little more cautious and you want that confirmation, then live with your decisions as well. Don't beat yourself up and look back and let's say maybe you missed an entry point where you could have got in a little bit earlier, right? Could have gotten a little bit lower. And one of the worst things you can do to yourselves, in my opinion, is to look back at that and beat yourself up and then change your process based on that. Because then all of a sudden now you go, oh no, you changed it. And then you didn't get that confirmation. You got in early, then you got bit.
Yeah.
And now you're going back and forth. So stick with your process. Understand that doesn't mean you're going to get in the absolute lows, get out the absolute highs. That's not really what you're doing if you're a swing or a trend trader anyway. You're looking to get in and hopefully make profit. That's the idea of the game, so to speak. But I think, Kevin, you're right. Having the process is a key thing, and to stick with it. And if you do change something in that process, change, like one thing and hold it for a while to make sure that change was a valid change. Because you start changing several things at one time, now you don't know what was the good, what was the bad of that. So be cautious of yourself and have confidence in yourself, I should say, and go at it slowly.
Yeah. That's a good reminder, Ray. If you change too many input variables at the same time, you're not going to know which is the true factor for you, right? So I like that point. Make a minor change to your process, go with it for a little bit, see if you can utilize it, and if it helps you. And if not, then you make another change, but don't make multiple changes at the same time. I like that approach. I think that makes a lot of sense. Ray, we were talking pre-show about some of the macro detail that we might want to consider in the market this morning. And I wanted to look at some key components that might be having an impact on our broader move here. So the first thing that I wanted to look at was the 10-year yield, which has not cratered, but took a really good move lower, probably tied to that jobs number we got revision on Friday. That was a little bit of a reminder that, hey, maybe the economy that we've been led to believe is very strong suddenly might not be as strong as we saw. And yields coming lower might be speaking to that. What are you paying attention to here?
Yeah, so that is a good point. I know there were a lot of factors that came out on Friday that kind of shook people's confidence, and that kind of reflects there, obviously. Again, though, look at where they came down to. Look at that strong, huge level of support right there.
Yeah.
So that's depending on how your outlook on the market is. If you're a perma bear, you're like, it's going to go through. I know it's going to happen, right? So depending on how your outlook is and what's happening, it kind of reflecting what's happening today as well. With that small move, kind of staying right on that support level. So again, as more information comes out, what's going to happen with the tariffs? What's going to happen with other? I think there's a few other indicators coming out this week as well. Again, I think at the top of my head to watch for. But yeah, that's something to look to see what's happening. Looking at the 10-year note and other bond markets as a whole, it gives you a good understanding. And Kevin, this is where something I think people they always get scared about looking at the bond markets and what's happening there. But you got to understand how it works, especially looking at, gold and other things. I always had a professor in college who talked about the dollar and gold. It's
Yep.
always, the dollar gets weak, the gold gets strong. Gold gets weak, dollar gets strong. And you can use that back and forth, seeing what's happening. And this is how you can use the bond market. What's happened if people are freaking out on the market itself, where are they going to go?
Yeah, exactly right. Yeah. Hey, I'm glad you mentioned gold and dollar because we're going to look at those. I wanted to answer a question in the chat here. Yeah, deplorable what you're looking at with regard to the white lines that I'm drawing in. My white lines are manual drawn trend lines. They have a beginning, they have an end. Now, the others that you see on here, your dynamic lines, those are going to be my standard moving averages. In this case, the orange is my 20-day simple moving average. The purple is the 50-day, and the 200. And those are based on closing prices over the window that they're defined for themselves. So the 20-day just looks at the closes of the last 19 sessions plus today's last trade, and then plots that line for us in the moment. So, of course, the 20-day, very speedy, more reactive to current price. 200-day, much slower, less reactive to intraday price movement like this. That horizontal line that I drew in, though, is me asserting the idea that that's a level from which we could find some support in yield here, right at 4.2 or 42, excuse me, the equivalent on the 10-year note, 4.2%. That's what we're looking at here. Okay, Ray, I wanted to look at dollar. And then I also wanted to look at gold because, as you mentioned, there's a relationship, and we don't need to necessarily understand more than the relationship expectation. That is to say, when the dollar is falling, it can be a boost or a tailwind for the U.S. equity markets. And Ray, we've had the dollar in a very steep decline in the midst of the majority of this move, while the opposite direction has been the case in the form of gold. And so I thought we could just look real briefly at that, and then we'll talk about that relationship. So quickly, Ray, look, I mean, these two charts couldn't be more different. They are the exact opposite of each other. Dollar down, gold up. Yeah. All right, talk to us. What do you see?
Yeah, so, again, everybody knows that the gold side of the business is your tangible, your strength. It's going to hold that value. And so people, when they get a little nervous about what's happening with the dollar or the economy, they tend to move towards that known strength, that known quantity. And it's pretty scary, Kevin, that I learned that 41 years ago in college. I still remember that's how significant that was back then, even. All right.
Yep.
And it hasn't changed. And that's one of the reasons why that happens that way. It's you see it on TV in the commercials. What do you want to buy? You're going to buy that gold. That have that peace of mind, so to speak. But yeah, people will tend to move that direction, and it's something you can look at. You can use that as a trader. It's something that you want to do. So that ascending triangle right there, you're drawing in. You got a pretty strong level of resistance right there. And that upward trend still moving. Now, recently it's kind of leveled off a little bit. The dollar, somewhat, and you'll see oil pretty soon. Probably you can talk about that and how oil drives a lot of the decision too. The liquid gold, as they say. But yeah, the dollar. You see the dollar kind of trending a little flatter and moving sideways as well, and you kind of see that in the gold. They've kind of stabilized. All right, they haven't really moved as much.
It's kind of interesting right now, though, when you look at gold and its opportunity to possibly break out, whereas the dollar has broken higher and might be reversing a trend here, everybody. So this bears watching. I can't tell you because I don't know what's coming next, but it is notable that you've got the big move we've had over the last 2 weeks, the 20-day simple moving average about to cross the 50 to the upside. So we're seeing a bit of a shift in short-term trend. And if this candle you got today is actually at support and bounces, well, then this could be the indication that what was a downtrend very clearly has maybe broken and become a bit of a new trend. So This is all very interesting, Ray. Longer range development.
Yeah, you had back in April, May, June, you had a little bit of a higher high, higher low situation going. Now you have it seems to be a little stronger, more consistent move of the higher highs and higher lows this last couple of months. So yeah, you just might have it now. You kind of have a W pattern at the very end there, and it broke the resistance of the W, which is again another positive indicator right through there. Yep. And so, hey, as technical analysis goes, that's showing a little more of a definite, it is an uptrend, short term as it may be, and that break it made of the W back right to that old level of support, new resistance that you have in that red line. We'll see if it can rebound through that. Obviously, Kevin, if it goes through that red, that resistance level about 105, or I'm sorry, 101. Yeah, right there.
Yeah, 100, 101, somewhere in there.
Yeah. And then, pretty strong indication.
Yeah, it would be a big difference for us because, again, if we just pay attention to the movement in the broader U.S. market here, we've had a great move on a year-to-date basis, and the dollar has been falling the whole time. If the dollar rallies, that could be a shift to things, could provide us with a little bit of headwind here on the broader market. So we're going to pay attention to that. We had some requests to hit up oil. Interestingly, energy is basically flat on the day as it resides at the 50-day moving average here in purple. We've actually seen a little bit of volatility come out of this space. You can see the price range that we've gone in, Ray, over the last, dating back to June here. So really the last 2 months, we've had it's kind of a tightening range, isn't it? I mean, if I eliminated the channel that I've been watching, really this one seems notable. It's tightening up a little bit. But oil today, bring this in, is coming lower yet again. We were at this important zone up around 68, 69, and actually as high as 70 a barrel last week. And we've quickly been thrown back. I mean, we're off $4 just from that move.
Now, the other thing you could draw a channel almost right up through. That mark. So if you remove those two trend lines.
I think I see it right
and draw
here.
That. Yeah, there you go. So that's that's another indicator of what's happening with it. I think in the news, some of the news that the OPEC agreed to increase production as well.
Yeah,
and so that could change a few things, see what's going on. But it's interesting to watch. Either watch the futures or watch an ETF, whatever you want to look for that can give an indication of how to look at the markets. I think hopefully, Kevin, people are writing down notes, and not that you have to look exactly what Kevin and I are looking at, but I think as a trader, looking at the different aspects of the market, the indices, gold, the dollar, oil, the bond markets, the treasuries, looking at all those things to see, what's happening in the market as a big picture can really give you a good indication of how you may want to approach your individual stocks. The old adage, the old adage, the rising tide lifts all ships, so to speak, right? Mm-hmm. And if you understand kind of the big picture of the market and how things are affecting, what does the dollar do, and what's the bond marks, all those things we talked about, that have that as part of your routine. Hopefully this is part of your routine, listening to Kevin in the morning and all the guests he has on, because we all bring different ideas, different aspects, and looking at all those different aspects can really help you a lot, understanding maybe this is why my stock's gone down, or maybe this is why my stock has gone up a little bit, in conjunction with what the individual stock's performance is. Yes, obviously, but there's a big part of that is what we're covering right now.
Totally agree, Ray, and I appreciate you mentioning it. And I'll tell you, nobody's going to feel more confident about the rising tide lifting all ships than a Navy man. So I appreciate you bringing that one to the table today, my friend.
Marine, but I'll give you that one.
Okay, fair enough. I'm sorry. Marines. Yes, indeed. All right, Ray. Hey, we're going to remind us exactly why we're seeing the move in oil. You mentioned OPEC. I wanted to give everybody the specifics. OPEC Plus members agreed to an increase of oil production by 547 barrels a day in September. So that's why you're seeing a bit of a drawdown off of the move over the weekend. The 8 OPEC Plus member states continue to scale back the 2.2 million barrels a day output cut that they agreed to in 2023. So that bears monitoring, okay? Mm-hmm. All right. Now, outside of that, Ray, we had some stocks in the news. Now, one of them that you mentioned that you might want to look at here, we are going to hear from Tesla this week. I thought we could just take a quick snapshot since I've got you on the show today, Ray, looking at what Tesla's been doing. Let me pull this back, and I'm just going to hide my existing order on Tesla so we can speak about this a bit more clearly. But Ray, this has been really in this formation as we've just not gone anywhere with Tesla the last couple of months.
As a matter, I wish you could see my screen, Kevin. I have the exact same triangle drawn in on my chart. It's I have mine coming out a little more of a peak. Showing, because I like looking at that, and I extend mine out a little bit to see which way is it going to break, and right now, it's squeezing, and we'll see just what's going to happen right now. After Friday, you had a big dip down, and it fell below that support level, but as you can see right now, it's rebounding back up through there. But there's a lot of things going on with Tesla. Notwithstanding the drop in sales in China, and what's going on with the restricted shares back to Elon. Who knows what's going to happen there? What's going on? How's it going to drive things? But yeah, it's an interesting stock. Everybody loves talking about Tesla and the volatility. Where's it going to go? This is something that I think is pretty telling, though, when you draw in that support and resistance levels of how it's squeezing together. And look at and also, Kevin, look at the tightness of the moving averages.
Yeah, they're right on top of each other, aren't they?
Yeah. And so
go ahead.
No, I'm just saying, and so as we go along here in the next few weeks, to see where is it going to break. What's it going to do? Make a decision finally. Earnings have already passed, so you should have some calming of that. So as the price action now drives our decision on this, where's it going to break?
Well, that's just it. You don't have to trade it before a breakout, right? A lot of traders will just say, take the trade in the direction of the break, whichever that is. I went ahead and applied a couple of studies here. One, I put on the Bollinger Bands because the volatility has really left the position. And if you, one of the things that some traders will look to, everybody, is they go back about 6-7 months. And if you can see the Bollinger Bands at their most narrow in that window, well, then you might be due to see a spike in volatility. And that's kind of what we're seeing here. I've got the Bollinger Band width study down below, everybody, so I don't just have to eyeball what's happening with the Bollinger Bands. So the width of the Bollinger Bands is the lowest or the tightest it's been since February 5th. That's about 6 months, 1 day shy of 6 months. So we could be looking at a volatility spike coming to Tesla. Would anybody be surprised by that? We've got earnings this week. Of course we wouldn't. That makes sense, doesn't it? So the question becomes how much of a spike. And if we look at the earnings for the week, it's not as big as you would expect it to be right here, Ray. Very limited in scope from this. Or excuse me, Tesla's not giving us earnings this week, right?
No, they've already had it. Yeah,
they've already had it. So we could be getting a spike. Excuse me, everybody. We could be getting a spike that has nothing tied other than to the headlines that you called out, which were China's sales of Tesla falling 8.4% in the month of July alone. So we could be witnessing some volatility coming back in here, Ray, at least as it relates to Tesla.
Yeah, I agree. And it's one of those It's if you're not trading it and you just like watching it, it's a fun one to watch. And if you're trading it and you got a really good stomach,
You might need it.
you might need it.
You might. Now, it hasn't been giving you reasons for concern of late necessarily. Like I say, the prices have been tightening up, but at some point you would expect volatility to come back in here. Let's talk about a couple that are coming though. Traders are noting we were going to hear from Palantir this afternoon. Let's look at Palantir because I thought a good thing to do would be to give traders an idea as to the expected potential move here. And one thing we can do on that, everybody, is just jump to the trade tab and look for the IV. So here's IV, 131% for this week, Ray. They're basically expecting an $18 potential move, not expecting an $18 move. We don't know directionally, but that's the idea of volatility for this one. And that's substantial. For the record, Ray, I did the math. It's about 12%. That's a pretty healthy clip. That
is pretty healthy. And that comes this afternoon when the market closes, can really, move a trade, move the cost of the trade around pretty significantly in just a matter of, hours and days.
Sure.
And, right at the money is typically always the highest amount of Vega that you're going to see, as you can see here on the options chain that Kevin just pulled up. And, today's the day. And that's why you'll see that. Now, tomorrow, after they announce earnings and see what goes on, you'll see a significant, typically, either if it goes up or down, you'll see a significant drop in Vega because what? Now you know.
Right? Known event.
That's right. Yep. Known event. So now you know, and that's why people like using those kind of trades. And by the way, if you don't understand what some of those volatility trades are, like we just talked about, we teach those in our advanced options classes. And so it's something that you want to get a hold of and start thinking about or learning at least how to understand it,
Yeah. Couldn't agree more, Ray. I think that's one of the great things that occurs in those live events is that the opportunity to really pick up these important criteria is extended in a face-to-face opportunity like that. And I'll just remind our viewers that the event itself is not just Ray and Scott and Ben Watson up there on the set talking. There's also, we've got our trading solutions group available. They're working through Think or Swim, and we've got our trading solutions and regional investment strategists at on the site as well. And we've got our branch executives, branch representatives there too. So, it's a holistic approach to doing business with Schwab that happens at these events. It is led by the educational topics, technical analysis and advanced options or standard options. But Ray, it's a broad scale offering. It's exactly what we love doing in those live events.
Yeah. And it's, I haven't heard anybody go in there and go, "Oh, hey, that was a waste of my time." It never happens, and it's always, and when I'm on the stage as well, I know Kevin's up there. We teach, if you just pull away one nugget, you've done something, right? Mm-hmm. So it's a great opportunity to give around a lot of folks that with the like-minded outlook on the markets on how they want to do better. And so,
as we say, Ray, it's an ongoing learning experience. The learning never ceases as it relates to the market, and it's important to keep working at it. Everybody, we are very close to time. I just wanted to throw up a couple of charts for you all. One upgraded security today is Spotify. Philips Securities upgraded Spotify to neutral, had been previously at reduce. Estimated target on this one is 600 on an upgrade. So notable because the stock had broken down, had a great open, not so great since the open. Keep an eye on today's price action, kind of help you out and dictate maybe the next move here. So there's one upgrade. And then we also had a big downgrade, and that was on Coinbase. Coinbase announced late last week, and Ray, they got beaten up pretty good here, and the downgrade is not going to help them out much today.
No, it's they've kind of hit that real small intermediate level of support right there, and you're right on it. It'd be interesting to see how that continues on. Especially was their earning? They got earnings, looks like right there.
They just had them late last week here on the 31st.
Oh, okay.
And the level they fell to is kind of interesting here as a gap spot and very short-term support. But trying to fight it out at the 50-day. And of course, I imagine now, Ray, the question is, are we going to see the 50-day recaptured, or do we trade through the low we made in the last 2 days, which could then call out the 200-day as support potentially down below?
Exactly. Yeah.
Yeah.
So that's going to be a good watch.
As always, something to keep an eye on here, right? I mean, that's what we hope to bring to the table for you, everybody. A broad review of the major indices, a look at sectors in detail that are moving today, and give us some ideas as to how we may want to approach things the rest of the day and the rest of this week. I'm really glad you all made it today. Big thanks to you, Ray. It's been a while since I've had you on, but a wonderful discussion with you. Can't wait to see you in New York this week, but thanks for being here, man, and thanks for sharing your thoughts, your insights with our viewers today.
Thanks for having me, and I'm looking forward to coming back again.
Can't wait, Ray. We're going to do it again, no doubt about it.
All right.
Everybody, thank you all for joining today, for being here. Many new viewers and faces today. Couple of things you can do for us. Hit that thumbs up button down below if you like the conversation. Don't forget to get subscribed to the Schwab YouTube coaching channel here, the Trader Talks page. That subscription will help us a lot, but also brings to you a multitude of archive detail. This show in particular will be archived a little bit later and available for a rewatch if you would like. You can follow Mike Fairborn and me, that is, on X, Mike Fairborn CS, Kevin Horner CS. We would greatly appreciate that. We try to post for you throughout the week there, everybody. So if you're looking to engage with us outside of the classes we offer you here, X is the best place to do it. So thanks for being here. Have a great Monday. We look forward to seeing you all again real soon.